opposed to traditionally, what is the role of private real estate investment in your portfolio? I'll give you a few multiple choices you can start with. Is it pure return? Is it a hedge against inflation? Is it diversifier versus the other asset classes? Or is it something else? Or more of this? Anyone of you wants to go first?
I think it's all of those things. For us, in a mixed asset portfolio as an insurance company, we have life businesses, we have general insurance businesses, and for us, the process starts with liability matching. When you get the mapping of your liabilities and think about what risk factors you want to expose the firm to be able to meet those liabilities over a certain period of time and still attract an attractive risk-adjusted return on a nominal basis as well as relative to your peers. What you want to try to do is create an optimal mix of assets. And so what we've done is taken a look at, try to decompose real estate returns and map that to equity factors, fixed income factors, commodity factors, inflation, liquidity, and come up with how we think the asset class will behave over a long period of time in a core construct. And in that way, what we try to do is think about real asset downside protection, inflation protection, certainly some equity exposure, some fixed income exposure, but from our standpoint, that's really what real estate is supposed to do inside of a mixed asset portfolio that's from insurance companies.
So when you say, do you do what's called liability-driven investing, LDI?
I don't know that we call it that. You know, for most of what we've referred to in our jargon, is ALM, asset liability management, which goes into asset liability management, which gives rise to strategic asset allocation.
So you're trying to match the liability. You have to pay out money in the future, and you're trying to match the incoming cash flows to match that.
That's exactly right.
So in that context, if we can stay on this for a second, what's the role of using leverage for you?
There isn't, and I think good arguments could be made depending on the investor around the use of leverage, particularly where it's on offer today. In a pure insurance company context, you know, our rate of funding is very, very attractive. And in a way, you can think about insurance as almost the most attractive form of leverage there is, and that is taking premium in exchange for maybe never having to essentially repay that money. So when you think about your claims experience and you think about where the firm can finance itself, in a way, mortgage debt is almost dilutive. So from our standpoint, having the pure form of unleveraged real estate does a couple things for us in terms of all that it offers, but the absence of leverage also provides a certain security in that you don't have a standalone asset liability mismatch within your real estate.
So core investing is widely practiced and also, you know, widely talked about, and people wonder, how can they pay that cap rate, or how can they accept that return? And at least one answer is that it's not necessarily the total return that's being sought by the core investor, but more of a asset liability match. And real estate plays an incredibly important role in lining up the incoming cash flows with what the obligations are to pass out. And if I can turn it